Hello and welcome to this month's edition of the Private Finance Sustainability 5 in 5, the podcast in which we spend 5 minutes exploring 5 key aspects of a sustainability trend set to shape the market this month. I'm Tom Cascales from the Climate and ESG Capital Markets team here at NatWest, and this month I'm joined by Ben Morley, partner and associate director at Boston Consulting Group. Ben leads the ESG due diligence and ESG reporting and metrics work in private equity for the firm, which includes BCG's support of the ESG Data Convergence Initiative. BCG support of the initiative includes developing a first-of-its-kind private benchmark of ESG data in the private markets. Welcome, Ben.
Thanks so much, Tom. It's great to be in conversation with you.
So let's jump in. Could you tell us more about the objective for this initiative?
Absolutely. This is an exciting industry-led initiative by the GP and LP community that have really come together to drive convergence around meaningful environmental, social, and governance metrics for the private equity industry and generate useful, performance-based, comparable ESG data.
And I saw that you recently published an article on interim finding from the data collection exercise. Could you present some of the key takeaways?
Absolutely. So to start with, one thing we observed was that privately owned companies are actually typically behind their publicly owned peers on metrics like renewable energy usage and gender diversity on the boards. However, on the other hand, it was also really interesting to note that private equity-backed companies have been creating jobs at 2 to 3 times the rate of publicly held companies when you normalize for their headcount. We think this flies counter to the typical narrative of private equity as an industry that creates returns by stripping out jobs. But that's what the data reveals. I mean, this is what we see in the data. And then what really excites me is the potential for the private equity industry to drive change on some of these ESG topics. And that's evidenced by some of the initial trending data. I think we saw, for example, that funds that have been tracking their portfolio companies' use of renewable energy over time, they've been able to report some pretty significant improvements in just a couple of years. And that's typically, we kind of link that back. Typically in private equity, you have both a control ownership position and a long-term mindset, which enables you to maintain your focus and realize change. So our hope is that something like the ESG Data Convergence Initiative and the associated benchmark, it'll be a really effective tool in the toolbox for GPs to kind of focus on these topics, engage with management teams, and really drive some profound progress.
And what feedback did you receive from privately owned company during the data collection phase?
If I think about the feedback we received, the main area we had questions was around the greenhouse gas emissions calculations. So particularly around kind of what sort of estimates, what sort of data quality would be accepted around greenhouse gas emissions. So in order to ensure the integrity of the benchmark, high-level proxy estimates were rejected, while kind of spend-based, activity-based, direct or supply methods, those were the ones that were accepted in the inaugural year. I think as the guidance is reviewed and enhanced in the future, I would imagine that will continue to evolve.
So looking forward, how do you think this initiative will shape the private equity market? And is there any implication for private debt market?
Yeah, that's a great question. So I think from our perspective, a huge opportunity for private equity and for society as a whole now exists. I think our hope is that the greater transparency and comparability of this data will prove to be a kind of key enabler in helping the private markets to improve ESG performance. When I'm in conversation with GPs on these topics, it's been really powerful to hear how they can sit down, they can review their portfolio holistically relative to a private markets benchmark of their peers. They can effectively prioritize kind of where should they be spending their time, which portfolio companies, which specific metrics, and then they can focus on driving change, which is what private equity is so good at. Then on the private debt side, I know the EDCI steering committee of GPs and LPs, they've been exploring potential applications in private credit. I expect them to make kind of continued progress on this in future years. I think this sort of metric harmonization will be a really helpful enabler to enable all portfolio company stakeholders to be able to kind of get access to relevant ESG data that they can use to help make decisions.
Wonderful. And how can someone listening to this podcast support the initiative?
Well, firstly, I mean, a kind of a huge thank you to all 230 GPs and LPs that have already publicly joined the initiative. It's fantastic to see the kind of the industry coming together in this way, to collaborating on making progress. I think I would say I would encourage all private equity GPs and LPs to consider joining this initiative, supporting this important endeavor. We know that as more private equity firms join and more data accumulates, the benchmark will provide an increasingly valuable tool for LPs, GPs, and portfolio companies alike to drive meaningful ESG progress and value creation. So if you'd like to learn more, I'd recommend checking out the EDCI has a website, esgdc.org. And then BCG recently published a report with our findings from the inaugural year, so you can find that on our website.
Great, thank you, Ben, and thank you to our listeners. As always, please be sure to check out our monthly newsletter, link in the description, for more on the key sustainability trends shaping the market. Thanks again, and see you next time.